Business loans backed by real estate. Bad credit. Asset-based lending. Obtaining a business loan can be difficult for those with bad credit, especially when that loan is backed by real estate. Asset-based lending (ABL) provides an alternative to traditional financing avenues and allows businesses access to the capital they need, even if their credit score could be better. This video will explore the process of obtaining business loans backed by real estate. Bad credit. Asset-based lending and discuss its benefits. Access funds quickly and easily with asset-based lending. Asset-based lending involves providing a loan backed by assets such as inventory, accounts receivable, or other tangible items owned by the borrower. The lender then uses these assets as collateral to secure loan repayment and reduce the risk of loaning money to someone with bad credit. ABL loans are often used when a company needs short-term working capital but doesn't qualify for traditional bank financing due to poor credit scores or lack of collateral. Real estate asset-based lending takes this concept one step further. Instead of using intangible assets like accounts receivable or inventory as collateral, lenders use actual real estate properties as security on loans. Many investors choose this type of financing because it offers them higher leverage than traditional financing options, allowing borrowers to access considerable sums of cash without putting up additional personal or business assets against the loan. Types of collateral that can be used for asset-based lending. Asset-based lending is a commercial loan that uses collateral to secure the loan. Collateral can be any valuable assets, such as real estate or inventory, and must be liquidated if the borrower defaults on their payments. For asset-based loans to work effectively, they must have an adequate collateral value that covers the amount of the loan requested. This ensures that lenders will only lose money if borrowers can make payments. Real estate financing is one common form of asset-based lending and may involve mortgages or other types of secured loans, based on the value of property owned by the business. Commercial lending often involves more significant amounts than those associated with individual borrowing. However, asset-based small business loans are available for any size company looking to borrow funds from a lender. Businesses have multiple financing options when seeking capital, with some providing more benefits than others. Asset-based lending offers a viable alternative to traditional bank loans, as it offers access to more money and often has fewer qualifying criteria. But asset-based lending carries additional risk due to its use of collateral as security for defaulted payments. How to determine the value of your assets for lending purposes. Resources matter. When asset-based lending is at stake, it's vital to have the right collateral. Real estate has growth potential and ready liquidity is often preferred as security. But inventories, accounts receivable, and other assets can also be effective if adequately valued. Customers must accurately determine the worth of assets before submitting them to the lender. They should be able to back up that number with evidence and satisfy requirements about the loan amount sought. The details are vital in obtaining approval from a lender and should be noticed. Assess, analyze, act. Cash flow-based loans are a prudent way to fund businesses. By using future revenue as loan collateral and examining past financials, lenders can shrewdly choose whether or not to extend the offer of capital. It pays to thoroughly weigh the upsides and downsides before committing. Examining current statements helps boost relevant knowledge. Projected revenue must align with cash flow history and creditworthiness. Weighing options means considering each situation separately, which requires courage from enterprises and brave analysis from lenders. Only then can an answer be found that balances risks and rewards for both parties and leads toward success. Maximum loan amount, interest rates, and terms for asset-based lending. Money talks. When a business considers asset-based lending, it's wise to know the loan amount and interest rate that can be charged. Maximum loan? Based on the collateral's value. 80% or less when real estate is used, for instance. Interest rates? These vary, creditworthiness, size of the loan, and property type. Commercial loans tend to bring in higher ones, to protect against more significant risks. But take your time with knowledge. Understanding all angles is necessary for wise decisions and successful loans. Research and investigate every lending option available and get ready to talk money. Finance for growth, but know your facts. Understand the accepted assets and their worth. Measure up the repayment timescales and any associated fees. Cash flow loans can offer greater flexibility but come bolted with extra safety measures. Whatever route you choose, ensure you're fully armed with knowledge before embarking upon it. Research each path, compare benefits and consequences. To secure success, understanding brings assurance. Forward-thinking financing must be followed by intelligent decision-making. Comparison between asset-based lending and traditional bank loans. Studying all options is part of investing in success. It is possible to obtain a loan based on assets or a traditional loan, and asset-based loans are often approved faster with collateral, such as property. For large amounts, bank loans require strong credit scores and more security. Weighing pros and cons are crucial. Timescales, rates, and conditions merit consideration before deciding which fits best. Expert advice can aid decisions, providing detailed information tailored to any individual situation. Loan structure matters. Look beyond interest alone to get the best answer. Subsequently, repayment plans offer more flexibility when compared to typical commercial mortgages. Business owners must determine which option makes more sense based on the many factors influencing their decision-making process. Ultimately, asset-based real estate financing is a prudent option that can unlock new opportunities for businesses needing immediate proceedings, but difficult circumstances. Risks associated with asset-based lending and how to mitigate them. Default is a real risk, so prior repayment performance and loan terms should be scrutinized. The lender may repossess the collateral if payments are not managed. Then there are taxes. Borrowers should directly cover any outstanding levies on the property to avoid further debt liabilities. Detailed due diligence serves best when choosing asset-based financing. Understanding and addressing potential risks upfront ensures the best outcome possible in the long run. Dig deep to understand the hidden costs. Initial fees, interest rates, late payments, and additional services add up. Calculate if asset-based financing is worth the extra expense in the long term. Forget assumptions. Consider assets that require ongoing maintenance or service contracts when assessing a loan. Plan and pick the right lender who won't hit you with unexpected fees. Prioritize caution over convenience and look beyond traditional banks for tailored loan packages that offer more value for money. Don't rush into an agreement until you've thoroughly studied your options. Strategies for improving your collateral value and maximizing your borrowing capacity. Collateral matters, and it increases borrowing capacity, minimizes risk, and unlocks better rates. Diversify a rent-generating property or big-name stocks to maximize options. Evaluate the portfolio, research refinancing debt, or sell underused assets for the highest return. Secure, reliable funds and flourishing financials with sound collateral management. Organizations must constantly strive for logical, precise financial reporting, disclosing all sources of income and expenses to lenders to achieve a complete, thorough understanding. All efforts taken towards mitigating risks related to ownership of assets should be included in the documentation. Keep up with the changing times and meet your capital needs. Change can occur swiftly, therefore, businesses must be agile regarding industry regulations and market conditions, adjusting accordingly to their capital needs. Relevant skills such as forecasting can help anticipate potential obstacles and empower borrowers with the leverage they need to secure financing under challenging times. Transparency ensures maximum borrowing power while keeping risks at bay. Required knowledge combined with intelligent strategies allows companies the capacity to use their assets more efficiently and maintain credit rating long-term. Business loans backed by real estate and lousy credit. Asset-based lending are viable options for companies seeking capital. By understanding the importance of financial planning and forecasting, building relationships with lenders and financial advisors, and leveraging assets alongside other forms of financing, businesses can maximize their borrowing power while minimizing risk. With the right strategies, companies can unlock their potential and reach their goals. Now is the time to take action. Start exploring your options today to secure the funds you need for success. Call 888-653-0124 today or click the link in the description to learn more.